I take this opportunity to welcome our Principal ADG of DGTS Mumbai Zonal Unit, Sri Sanjay Rathi, who is an IRS officer of the 1991 batch. Sir, I request you to please deliver the welcome address. Sir, over to you, sir.
A very good morning to one and all. Am I audible again, please?
Yes, sir.
Okay. A very good afternoon to one and all. Shri Dushyant Mulani ji, President of Brihan Mumbai Customs Brokers Association (BCBA) and also the Chairman of the FFAI, Dr. Pramod Sant, Director General of Freight Forwarders Association in India (FFAI), distinguished members of the trade, dear colleagues and all the participants. I stand privileged and honored to extend a warm welcome to this webinar. I intensely appreciate the support and cooperation extended by Brihan Mumbai Customs Brokers Association (BCBA) and the FFAI. These associations have played a pivotal role in accelerating genuine grievances at appropriate level, enabling the government to address and redress the problems in the right perspective. The role of these associations in stimulating, shaping, and scaling up the Indian economy is without dispute. I would like to mention that the DGTS is set up at Delhi with 6 zonal units. The Mumbai Zonal Unit caters to the whole of Maharashtra and Goa. The directorate is set up with a mandate to reach out to the taxpayers to create awareness about the changes in laws, rules, and procedures, and clarify the doubts arising following the new procedures. It is constant endeavor of the DGTS to bring in current and relevant, thereby facilitating the trade, importers, exporters in enriching their knowledge and enabling them to become aware of the change in procedure, which in turn enhances the duty compliance. Several need-based webinars have been conducted in the past by the Mumbai Zonal Unit by taking input from the trade. And today's webinar is one of such, and that too on a very important topic of manufacturing and other operations in customs bonded warehouse. As part of ease of doing business, the CBIC, that is the Central Board of Indirect Taxes and Customs, has streamlined a program based upon Section 65 of the Customs Act, which enables conduct of manufacture and other operations in a customs bonded warehouse. The program has been introduced via the Manufacture and Other Operations in Warehouse Regulations 2019 and explained to Circular 34/2019 Customs dated 1st of October 2019. Under this program, a unit can import goods, that is both inputs and capital goods, under customs duty deferment with no interest liability. There is no investment threshold nor any export obligation. The duties are fully remitted if the goods resulting from such operations are exported. Import duty is payable only if the resulting goods or imported goods are cleared in the domestic market. A comprehensive presentation shall be made by Shri Manoj Das, Deputy Commissioner of CBIC, who is now retired. He is an enabled panel visiting faculty at the NASIM. He has wide knowledge of the topic. The session, I hope, will be very fruitful to all of us. I request all the participants to make full use of this session. With these words, I welcome you all to this webinar. Over to Pradeep.
Thank you, sir. Thank you for your inspirational address, sir. And thank you for addressing the basic issue and giving the backdrop for this selection of topic today. Today's topic that is manufacture and other operations in customs warehouse, in short MOOWR, MOOWR. With this small background, now I take this opportunity to introduce today's trained panelist. Our first panelist is Sri Dushyant Mulani. Whosoever has worked in customs means known to almost everybody. So it's my privilege to introduce him here. He is president of Brihan Mumbai Customs Brokers Association (BCBA) and also chairman of Federation of Freight Forwarders Association in India (FFAI). Mr. Dushyant Mulani is the director of Kimji Punja Group, which is in existence for past 10 decades. He was instrumental in rolling out of single window project and closely worked with CBIC for effective rollout. He is member of Board of Trade set up by DGFT. He is a member of PTFC and CCFC Forum of Mumbai. As president of BCPA, Mr. Dushyant Mulani is proactive with issues faced by members and strives for the betterment of customs brokers fraternity. He has been engaged in constructive dialogue with CBIC, DGTS, Ministry of Shipping, Civilization, JNPT, Field Formation and Stakeholders, such as Vital, Shipping Lines, Shipping Agents, BMC, regarding various related issues to achieve various measures in ease of doing business. Our other panelist is renowned industry expert, Shri Dr. Pramod Sun, Director General FFAI. He is an industry expert and former Vice President, Head of Imports, Exports and Customs for the South Asia region that includes India, Bangladesh, Sri Lanka, Nepal and Maldives. During his tenure as Head of Imports, Exports and Customs with Siemens and Group companies in the South Asia cluster, was handling more than 45,000 shipments and top importer at the Air Cargo Complex, Mumbai. During this tenure, Siemens was awarded Samman Patra from Customs for 3 years. He was recently awarded as Honorary Doctor in Excellence in Supply Chain Management by Young Scientist, US University. He has received a prestigious award from industry bodies and forums, including the prestigious Dynamic Logistics Professional of the Year 2015 at the Maritime and Logistics Award by Exim India. He was awarded Lifetime Achievement Award in May 2023 by the Institute of Supply Chain Management, ISCM. First of all, I request Shri Dushyant Mulani ji, President of BCPA and Chairman of FFAI, to please share his views on this topic, manufacture and other operations in customs warehouse. Shri Dushyant Mulani.
Good afternoon, sir. Shri Sanjay Rathi ji, Principal ADG DGTS, Dr. Pradeep Janjaria, IRS, Assistant Director DGTS, Shri Sanjay Kumar ji, Assistant Director DGTS, fellow panelist, and Mr. Manoj Das, Deputy Commissioner, retired CBIC. Sir, on behalf of industry, we express our sincere gratitude for giving us this opportunity to give the feedback and express the industry's point of view under manufacturing and other operations in warehousing regulations 2019. Sir, this scheme which was rolled out has been one of the landmark scheme under the aegis of the ease of doing business. And this particular scheme, which is worked out for manufacturers, has been a wonderful exercise. There have been several feedback which have been received from the industry, particularly when our country is looking at Atmanirbhar Bharat and vocal for local. When we industry multinational corporations are looking at China plus policy towards manufacturing, and India is on threshold of becoming the third largest economy globally. This is the time, sir, when we need to take proper feedback regarding the scheme from the trade and industry, ensure that we nurture this properly for larger offtake by the trade and industry. This has wonderful features. Single point of application, deferment of duty for raw material, capital goods, no time limit for utilization of raw materials and components as well, no interest liability except cases of removal, no geographical restriction, and a self-appointed warehouse keeper in form of the private bonded warehouse which the company has. The benefits are tremendous. What we are looking at, sir, that there are few minor points that trade and industry have suggested, which can really help to take off this scheme in a major way. one of the few aspects which have been, when we took the feedback from a lot of industry players, for Asia Pacific region, India can become a major job working, create a job working facility. There are scores of players who want to work on this import and re-export basis, because this scheme has aspect for uh, domestic consumption also and exports also. So they have suggested a simplified way of bonding the consignments, uh, which is involving even transit of cargo from the gateway ports, ICDs, or air cargo terminals to the units which are registered. The second is after utilization, when the goods are going back, going to the domestic tariff area, filing of the ex-bond bill of entries. The industry has suggested that let there be a consolidated single bill of entry be filed for payment of any duties for the inputs, components, or raw materials. That will save a lot of efforts and time, because right now the ex-bond bill of entries have to be filed at the location for each item wise. So that's one suggestion that industry has given. The second was regarding Section 65 in the finance bill, which was given in 2022, regarding applicability of GST and compensation cess. So still that has not been notified under Section 65A. So some clarity regarding that would be very useful. And lastly, for applicability of export incentives such as ROTEP and drawback on these exports done through these units. Clarity regarding that also would be very helpful, and it will help our manufacturing activity to such an extent, because this is a most simplified way which has been worked out, less complications, less paperwork, and it's a straightforward scheme. So let us take this to the next level and have it publicized to our industry in a major way. This will take off in a huge manner and support Make in India, sir. Thank you. This is our submission.
Thank you, Dushan Mulaniji. It's always a pleasure to listen to your views and the way you open the discussions with your insight on any topic that is pertaining to this, anything pertaining to customs and areas. Thank you very much again. And now I request our second trade panelist, Dr. Pramod San, to address the participants.
Yeah. Good afternoon, everybody, and thank you, DGTS, Shri Sanjay Ratiji, Principal ADG, Shri Dr. Pradeep, Assistant Director, Shri Manoj Das, and the entire team of DGTS. Thank you very much. Regarding this scheme, which has come really at the important time when we are talking about Make in India, PLI scheme, Atmanirbhar Bharat, and then National Industrial Development Plan, all are focusing on manufacturing. And as Mr. Dushyant Mulani mentioned, China plus one, such scheme was really required, and which has come on time in 2009. So here just I wanted to add regarding my background, we are the one who implemented the mover scheme in Goa. We were the first to implement that, and it is working successfully. So what points were mentioned by Mr. Dushyant Mulani, that it is the easy one point of contact, less documentation, it all worked perfectly, and we have a very good example that everything is working perfectly. The important thing in manufacturing is this mover will open lot many new areas. When you do manufacturing, you do exports, you require the warranty, repairs, as well as you are replacing some of the products in industry, which is a refurbishment, etc. So mover, so when you want to import into India second-hand parts or old part, it is always very difficult process. So mover has solved this problem. So we are able to import the second-hand part for repair, refurbishment very easily through mover and get it repaired, do a job work or even overhauling of many items and send it back very effectively. So we find that the mover has got lot many this thing in addition to manufacturing other services which can be done into India much better way. The scheme is very useful. I will not spend time on the advantages, but most important, as I mentioned, whatever is mentioned about the single point documentation, then the you can handle into the area limit. There are no area limitations. You can start with a new plant within some part of your factory. You can convert into mover, so which makes the things very easy. Another important thing is the customers who are our manufacturers who are supplying a lot of items to EOU and SEZ. It is very important for them because from mover they can directly supply to items to the SEZ and EOU. So important as there are many schemes, I think there is a need to create more awareness about mover because many schemes are coming. People need to know more about mover, and hence really I appreciate the DGTS coming out with this outreach program, which will be definitely helpful. Helpful regarding the challenges which Mr. Dushyant Mulani mentioned. I just wanted to emphasize on one point, which is this 65A, which has been introduced, which creates a little uncertainty in the user's mind. Or when we approach anybody, the most uncertainty people feel that it is uncertain. So if that my item is not in the when the clarification will come, what will happen? So I think that needs to be cleared. But overall, I think this is a good scheme which is opening a new areas of for manufacturers and other operation, which is our where we can be really competitive globally. And the people have found out that yes, instead of something in Middle East to be done repairing, for that it needs to go to US or Germany, it can come into the India, and in it can be repaired, it can be overhauled, or you can do a complete refurbishment. So lot many new areas are coming with more, and I really want we need to have more outreach for this program. So, and probably the good case studies, if we are able to publish, then it will definitely help to create more awareness. So with this, I will stop. Thank you very much for inviting me. It's very useful, and we look forward for the detailed presentation from Mr. Manoj Das. Thank you.
Thank you, Dr. Pramod Sant, sir. Thank you very much for your insightful address, and also for pointing out 65A. Hope our panelist, means our main speaker today, he will address the issue and will clear the things that are being intended by the legislature here. So this is my privilege now to introduce our main speaker, presenter for today's webinar, Sri Manoj Das, Deputy Commissioner, retired CBIC. Sri Manoj Das retired as a Deputy Commissioner of Customs after a distinguished service career spanning 37 years. He is an empaneled visiting faculty at NASEM and delivers lectures on almost all aspects of the customs. He has a wide knowledge of the customs laws and procedures. He worked in almost all the key areas of customs, including SESTEC as an authorized representative. And those means among us who have ever worked parallel to him or saw him working anywhere knows that he is an institute, sort of a university in himself, a person of multiple talents who learned the art of pursuing the somewhat mundane official work and wildlife photography with equal passion. So it's big fan of Manoj Das, sir. Thank you, sir. Thank you for joining us, and we are really grateful and privileged to have you here today. So now I request sir to begin his presentation. Thank you, sir.
Thank you, Pradeep, for the kind words. Hope you can understand. You can hear me clearly.
Yes, sir. Yes, sir. Yes, sir.
Yes, respected ADG Srirati, Mr. Mulani, and Dr. Khan, Dr. Pant. Uh, it's nice to hear from you people about who are on the other side of the trade, about the good things about this scheme that has been initiated by the government. And Aj, I understand, you also understand that this is the need of the hour. I mean, this is a scheme whose main objective is to make India an manufacturing hub, create employments, and make the business easy to do in India. And of course, to attract foreign direct investment in the form of foreign companies coming here and setting up their units. So today's subject, manufacturing and other operations regulations 2019. Let me start with the people, those who are not familiar with the terms customs bonded warehouse, bonds. Let me start with the bonding or warehousing is a facility offered by the department as a trade facilitation measure. It's age-old thing. I mean, the bonding facility was available in England in the 19th century. Here it has come with the Customs Act from the beginning. It was there. This particular scheme, MOWR, was there in its earlier form in MOOWR 1966. There are some that it could not attract the trade, but the government has understood these things. And the government in the new scheme has tried to put in many things which it makes it interesting to the trade. Of course, there would be some teething issues, and I hope the government is looking at it, and all these teething issues will be done away with satisfaction to the trade. So let us start the bond. What is bond, or what is a bonded warehouse? Bonded warehouse is basically a duty deferment scheme. Okay, let me share the. I hope everybody can see the PPT.
Yes, it's visible.
Yes.
Make it full screen.
Yeah. So the bonded warehouse facility is a duty deferment scheme, and a bonded warehouse is basically a premises, either it is open or closed, which has been permitted to receive and store imported goods on which duty has not been paid. Section 243 of Customs Act defines it, that it has to be premises which has been permitted by the jurisdictional commissioner, by the competent authority, to receive and store imported goods on which duty has not been paid till its removal after due process. There are three kinds of warehouses: a public warehouse, a private warehouse, and a special warehouse. As the name suggests, the public warehouse is a warehouse where any importer who has imported certain things and he has been allowed to keep his goods in a warehouse, keep the goods in a public warehouse. The public warehouses are appointed under Section 57 of the Customs Act. The private warehouse, as the name suggests, is basically to store the goods by the licensee himself. In certain situation, if there is no space available in a public warehouse, then the goods can be kept in a private warehouse. Now there comes the warehouse. The private warehouse is appointed under Section 58. Now there comes a special warehouse, which is appointed under Section 58A of the Customs Act. The special warehouse basically can receive and store the goods that has been specified. Goods like gold and silver, the precious metals, precious stones, and certain other items who are sensitive. Now, from this warehouse, what is the basic benefit of this facility? There could be a possibility that somebody is buying the goods in bulk but doesn't want to clear them at one go. Then he can keep these goods in a warehouse and clear the goods as and when he needs it. That's how he is saving his working capital, which he can use otherwise. Next comes is the objective of warehousing. I'll mix both the subjects. Warehousing gives the same benefits to an importer which a warehouse appointed under Section 65 or the MOOWR units offer. The MOOWR, in addition to the storage, allows manufacturing process and other operations that we will be discussing later on. Now, the objectives of MOOWR units is basically to help India to be a global manufacturing hub. When we discuss the scheme later on, there I believe the participants will understand why it is going to make India a global manufacturing hub. We understand that due to certain situations, the schemes like STP, UOU, SEZ, these schemes have not been very successful as it should have been or as it was thought to be. Now, these schemes remove certain hindrances from those schemes to make it attractive, like no geographical restriction, no threshold for export obligation, no threshold for investment. There are certain other things which makes this scheme interesting. Now, we know that with the economic slowdown of China, the companies are exiting from China and are looking for regions where they can set up their units. Now, these schemes, which actually offers a very good opportunity to such companies, because those companies, many of those companies like Apple, it has started a business here, it is manufacturing here, and almost 65% of the product is being exported back. So let me expand it a bit, that when a unit comes and set up, say, MOOWR unit in India, it can, as my earlier panelists have said, it can import capital goods, it can import the raw materials, the duty will be deferred. The importer doesn't have to pay the duty if he has got a MOOWR unit and he is bringing this stuff where the capital goods will be installed in that unit and the inputs are going to be used that units. And if the resultant product of the inputs are exported back, then the duty is completely deferred. So for the units who are depending lot on imported inputs and are going to export a lot of these goods, for them this scheme is very attractive because it doesn't involve payment of duty at any stage, either for the capital goods or for the inputs. Now, third part is ease of doing business. Basically, with this scheme, those who are in the know, like those who are in the trade for long years, they would understand that the government has imposed lot of trust in the trade by bringing this scheme. This scheme is practically the units, they do have the freedom to import, export, sell the goods in DTA, everything without any intervention from customs. And of course, customs duty is inward, so customs will be interested in keeping a check on how the things are taking place. So there is a system of auditing, but that audit will be risk-based. And all those manufacturers who will be following the norms, they won't have anything to fear about an audit. And the system has been made so that keeping track of the products and keeping the records has been made very easy. It has been made digitalized. So the doing business is going to be a lot easier in such a unit. And these the units, those who are, let's take a case of Apple again. If they are manufacturing here, 60% of the products they are exporting back, but 40% of the product they are selling. That means they are catering to both to the DTA as well as are exporting as well. For such, these units are good. Basically, when I'll give the illustrations, how they are saving a lot of money by adopting this scheme. Let us understand how the goods go into a bonded warehouse. So this basic understanding is necessary for the people, those who are not familiar with customs procedure. First of all, goods are imported into the country, IGM is filed, and the importer who wants to keep the goods in a warehouse must file an into bond bill of entry under section 46. Once the bill of entry has been filed, of course, the goods are valued, assessed, and after assessment, the assessing officer, if everything is fine, allows the importer to transfer the goods from the docks or from the port to the customs bonded warehouse under section 59. And at this point, the importer has to submit a triple duty bond. And you may ask, why a triple duty bond? So basically, the triple duty bond is supposed to cover the duty, the fine, and penalty if somebody is violating the bond condition. So a triple duty bond, under the cover of triple duty bond, the imported goods go to the warehouse. And in the warehouse, they are moved under the permission given under section 60 of the Customs Act. Every imported goods that goes into a bond can there be in the bond till the bond period expires. This bond period is generally 1 year, unless otherwise the goods are of perishable nature and their shelf life is less than 1 year. Generally it is 1 year, but this bond period can be extended by the competent authority. So under section 61, the provision of section 61, the goods can be kept in the bond till the permitted bond period. Now, in the bond, there are many things that the importer can do. We'll be discussing that. 3 things can happen to these goods once they go into the bond. They can be cleared for home consumption under section 67, and under 68. They can be transferred to another customs bonded warehouse under section 67, or they can be exported to another country under the provisions of section 69. So basically, once the goods go into a customs bonded warehouse, all these 3 things can happen. It can be transferred to another customs bonded warehouse. There is a set procedure. Following that procedure, the goods can be transferred from one warehouse to another warehouse. They can be cleared for home consumption, or they can be exported. Here comes the utility of a bonded warehouse. Suppose certain goods are being imported into the country to be supplied as ship stores. Supplying to the foreign going vessels is considered as export. There is no question why they should pay the duty. or why the importers should spend to pay the duty and again at the time of export ask for the refund. Instead, he simply imports his goods, keeps it in the bonded warehouse and exports it in the form of supply to the C stores or supply to the duty-free shops or for consumption of the VIPs. VIPs mean there is a certain category of personnel like the foreign diplomats who are eligible to buy from the bond without payment of the duty. So hope I'm able to convey you the basic utility of a bonded warehouse for somebody who wants to export his goods in some form or other. Now, basically importer. No, sorry. Now let's talk about the somebody wants to start a bonded warehouse. Then what are the eligibility criteria? What could be the grounds of rejection? The first thing is that since the goods will be with somebody on which customs duty has not been paid, so the financial stability of the applicant has to be checked. That's why those who are applying to start a customs bonded warehouse must show their financial stability for last 5 years. Then, since again the goods are going on which duty has not been paid and the revenue is at stake, the premises in which the goods are to be kept must be a secure place with all the security like firefighting, CCTV, etc. Then comes the goods need to be inspected by the officers of customs. So there should be accessibility to the goods so that the officers of customs can inspect the goods as and when they want. Then the location, it should not be in a residential area and it should be in an area where within the proximity to the custom house so that the custom officers can be available. The third thing is that the one who wants to start a customs bonded warehouse must take an all risk covering insurance which covers the entire goods that is going to be kept in this warehouse. Now, the applications can be rejected if the person or institution, the entity who is applying to start a warehouse has been declared as insolvent or bankrupt by a competent court. If the person has been convicted under any law, then the application can be rejected too. If the person has been penalized for an offense under the Act, set under Customs Act, Civil License Act, or Chapter 5 of Finance Act 1994, in that case, the application can be rejected. If he is found to be unsound mind and stands so declared by a competent court or where the Commissioner of Customs is satisfied that the premises is not suitable for secure storage, the premises is not suitable for supervision by customs, bankruptcy proceedings are proceeding against the applicant or criminal proceedings are pending against the applicant, in such cases, the jurisdictional commissioner can reject the applications. Now, these are the conditions that has to be complied by the applicant. First thing is that all risk covering insurance policy, provide an undertaking binding himself to pay any duty, interest, fine and penalty, undertaking indemnifying Commissioner of Customs from any liability arising out of loss suffered. Let me explain these points again. I mean, the insurance is for the duty. But then suppose there is a fire in the warehouse and the goods are burnt. Then in that case, the ones who have stored the goods in that warehouse should not be making the Commissioner of Customs a party to the compensation process. it has to be the licensee himself. And the licensee must undertake to adhere to all rules and regulations made under this act for operation of the customs bonded warehouse. Now, when the goods has been kept in the customs bonded warehouse, the importer can or is allowed to do certain things. These are the actions that he can take about his goods with the permission of the proper officer. Of course, he can inspect the bonded goods. He can sort the goods and change the packaging for preservation. He can take necessary action to prevent loss or damage. Let us say that some of the things has been imported in drums and some of the drums has been damaged. Then he can change the drums so that there won't be any further damage. Same way, that if there are some agriculture product and some of the products has been spoiled or some of the product are infested by something, then he can segregate those goods, keep the good ones sorted and packed in different packings. He can show the goods for sale or transfer of ownership to interested buyers. He can withdraw samples without payment of duty. These are the activities which are permitted while the bonded goods are there in the warehouse. And as we have, as I mentioned earlier, once the goods come into the warehouse, then there can be three possibilities. Goods can be cleared for home consumption. That section 66 is the wrong thing. That is section 68. Home consumption under section 68. For that, the importer has to file a bill of entry and pay the import duty. The licensee shall retain the bill of entry copy and take in records of the goods removed. GST will be applicable on the warehouse charges. For export under 69, the exporter or licensee files the shipping bill. The movement of the goods will be by affixing a one-time lock to the export container or under customs export. Remember that on which duty has not been paid and there is a possibility that the warehouse is in a distance from the port. So the goods has to go either under export or in a container where a one-time lock can be fixed. And in case it is being transferred to another warehouse, the goods can go under the same one-time lock and the documents will have the number of the one-time lock and the transporter will have the copy of it. Once the goods reach at the destination bond, the bond officer over there will acknowledge the receipt and give a re-warehousing certificate, and the re-warehousing certificate has to be produced before the originating customs bond. Only when the re-warehousing certificate is obtained or submitted by the transporter or the importer, then the entry at the origin customs bonded warehouse will be closed. Now, the basic subject that we will be discussing is the special warehouses. Then these special warehouses have been appointed under section 58A. Now, these warehouses to operate has to have two kind of permission. First thing is that it has to be permitted under Section 58 as a private bonded warehouse or under 58A as a special warehouse, then they have to have the permission under 65 to start the or to initiate the manufacturing and other activities. Now, the difference is when it is a private warehouse under Section 58 and having a permission to manufacture, in that case, the entire manufacturing process will have the freedom. There will be no customs control at all. But if it is a special warehouse appointed under Section 58A, where only precious metals and precious stones, semi-precious stones are being received and stored, and any manufacturing process happening thereafter, it has to be under the customs control. Hope you understand the difference. One doesn't have any customs control, and the special warehouse will be under the customs control. The salient features of this scheme. First thing is that the duty on the import goods, that is inputs and the capital goods, will be deferred. Now, deferred till when? First thing is that if the input goods are there in the bonded warehouse, till they are consumed, the duty will be deferred till that time. And if the resultant products are exported, then the duty is deferred completely. Now, if the resultant products are supplied in DTA, then the imported goods contained in those resultant products will be charged to customs duty. And here I want to tell you the real benefit. When it is going to be charged, there would be no interest on it. I can give you an example. Let's say that somebody imports raw material worth 50 lakh rupees, and out of which imported goods worth 20 lakh rupees is used to produce resultant products which are supplied in the DTA. Now, in that case, the duty will be only on the 20 lakh worth imported goods that is there in the resultant product, and there would be no duty, no interest. So, these 20 lakh rupees, the interest on that is being saved from the manufacturer or the importers. The same thing with the capital goods. Let's say that somebody imports capital goods worth 1 crore rupees, and the duty would have been something around 28 lakh rupees. Now, till the time the capital goods are there in the warehouse, the duty is deferred. So after 10 years, let's say that he has earned at least the interest portion on 28 lakh rupees. And if he exports the plant and machinery, then the duty is completely deferred. If he is selling it or supplying it in DTA, then of course he has to pay the duty. And there is a big issue. There is a big issue that there is no depreciation as on date available to the capital goods when it is exported and supplied to the DTA. There is no investment threshold or export obligation. This I believe was one of the reasons why the EOUs or STPs were not popular or were not successful as a scheme. So Now the department realizes that and has taken out that there should be no investment threshold and there should be no export obligation. So anybody, whosoever wants to start a unit and is ready to do the compliances can start a unit. And of course, it's one of the select features that the existing units can also apply to be an MOOWR unit. Apart from manufacturing per se, the other operations such as packaging, labeling, repacking are also allowed, and even the trading is allowed. But then, if the trading is allowed, then if the goods are sold or goods are supplied to the DTA in the same form as they have been imported, then duty is payable after 3 months. Then comes the application formality, a simple application which has got both the components applying for a private warehouse under section 858 and taking the permission under 65 for starting manufacturing. There is a uniform application all over the country and there is a single application. And the best part is that the manufacturer who wants to start the unit doesn't have to go to Delhi for every permission. The jurisdictional commissioner gives all the required permissions. He is the single point of approval for every operation under such units. Then these units, apart from importing inputs, can bring both inputs as well as the capital goods from the DTA or from the domestic market. For optimum capacity utilization, job work has been allowed. The units can take up the job work or units can give the inputs for job work. Only thing is that the capital goods cannot go out of the unit only except for repair. The input goods can, after following the due procedure, go out for job work and can come back. And they can also be exported from the job workers' premises. And since these units will be taking up manufacturing job, they have to have the GST registration. What are the activity permitted in such units? Manufacturing, both the things, manufacturing as well as the other operations has not been defined in this act. So let us take the general meaning. Ambit of manufacturing process is every activity that can happen in a warehouse. Same is with other operations. Scope of activity to be covered in the ambit of other operations needs to be assessed because there is no clarity on this. But things which are not allowed is the services sector, IT and ITES are not allowed. In other operations, things like repair, reconditioning, I had Mr. Pant saying this, let me say it again, that things like repair, reconditioning, re-engineering, calibration, testing, all these things are allowed. And things like, of course, packaging, labeling, repacking, all those things are allowed. So basically, anything that can be done in reference to the inputs, it is not for services, that is very clear. In reference to the inputs, anything that can be done in a warehouse is permitted. And in these, there is nothing has been specifically mentioned, or there is no need to mention or intimate in particular the activities. When the process starts, if somebody is starting a new activity, he can inform the jurisdictional commissioner and start that activity. Now, somebody who is interested in applying for manufacturing or starting such a units, these are the set of documents that you will be needing. First thing is that application form, certificate of incorporation, that is the details about the applicants or the directors. Then the financial statements. Basically, in this scheme, the government is giving lot of goods in the hand of the manufacturer, the goods on which the duty has not been paid. So, as a backup, the government needs to see that the financial condition of the applicant is sound enough so that he can be trusted, and in case he violates the conditions, then the duty can be recovered from him. So his bank solvency certificate, income tax returns are required. Next is the contact details of the site. Then if of course it is a lease site, then the owner's NOC, the site plan, the lease deed, description of the premises, all those things are required. Then comes the safety aspect. In the safety aspect, things like insurance is paramount. Then firefighting installation certificates, details of existing manufacturing facility in India or overseas applicant form, appointment letter of the warehouse keeper, work expense certificate of the warehouse keeper. This is a new thing that has been introduced in this scheme, is that the manufacturer has to appoint a warehouse keeper who has got enough experience of customs law and procedures, who has got knowledge about the working of the bonded warehouses. So by keeping them, the government has basically put in a condition that somebody should be there who is knowledgeable enough to follow the procedures, to observe the procedures, and there should not be any inadvertent mistakes on part of the manufacturer. Let's have the scheme at a glance. That the import of input products and the capital goods, the basic customs and IGST is deferred. Now, Mr. Pant talked about 65A. 65A proposes that the IGST has to be paid at the time of inbonding. Of course, it is a problem that the trade is going to face. Basically, the trade was expecting the entire duty or will be deferred. Now only the BCD part will be deferred. BCD pass and the cess and all those things will be deferred. Hopefully, the basic idea of the government is that since they are getting the credit for these IGST and all, they should be in a position to pay this upfront. But then hopefully there would be some solution to this problem, which has been introduced in the finance bill. Next is the raw material and the capital goods procured from the DTA. On this, it will be like any other product from the country on which the GST has to be paid. Export of the resultant products, BCD, IGST is waived off. If the IGST has been paid, then of course there would be a refund procedure. Then comes the resultant products for supply to DTA. BCD, IGST on the imported raw material contained in the resultant products, GST on the finished product has to be paid. It's true that everybody would like to have the scheme to be of their choice. But the problem is that let my 37 years of service be I got a question that GST part has to be discussed in elaborate discussion on the GST part. I hope we will be finishing these slides. Then we'll take up these questions at the end of the session. Is that fine, Pradeep?
Yes, sir. Yes, sir.
Because if we take up the questions right now, then we may not be able to finish the presentation completely. So
It's better to take them at the end of your presentation, sir.
yes, yes. Basically, it will be we'll see the timing, and accordingly we'll take up the questions and we'll explain them. That's fine. Now, still, let me say that supply for DTA would be taxable in terms of Section 9 of the Customs CGST Act or Section 5 of the IGST Act. Basically, this is what I'm telling. The BIS applicable goods to, well, there is a question of the BIS is a safety measure. So the BIS is a mandatory thing, and let me be very clear on this, that the NOCs that has to be sought from the participating government agencies, be it BIS, be it food safety authorities or plant quarantine authorities, will be there. They have to be there. I mean, they have got nothing to do with Customs Act. So basically, what we are dealing with here is Customs and GST. So the requirements of other agencies will be there as it is. There is no change in that. Now, what are the basic changes? The basic change is that in 66 or the MOOWR 66, the entire activity was fully under customs control. I remember when we were in charge of those units, there would be a locked premises. Only when they need to take out something, they will call the officer. The officer will have one key, they will have one key, and that locked premises will be opened. The inputs that has to be taken out for manufacturing process will be taken out. And at every steps, there was a permission that has to be taken from the proper official. Of the removal of the goods, of the finished goods I'm talking about, removal of the input as such was done under the customs control. Now, in 19, the basic freedom that has been given is freedom from customs control. Unless otherwise, it is an unit operating under Section 58A, then the manufacturer of such units, they are free to do almost everything. Only thing is that they have to have a foolproof record keeping method where from which they have to intimate what has happened during the month at the end of the month. So there is no question of taking any individual permission. It's only question of intimating the department about the happenings that has happened during the last month in the unit. Next was the earlier times, the inputs and the capital goods. They could be kept in a bonded warehouse up to certain period only. After that, again, the permission to extend the bond period was necessary. Now, it is not necessary at all. The inputs and the capital goods can be in the warehouse till the input goods are consumed and till the capital goods are either exported or removed for DTA. There was a process of renewal of license every year. Now there is no need. The license, once it is granted, it is perpetual till it is cancelled. No physical supervision by customs except in the time of auditing. And as I told you, the auditing is basically on the risk-based inputs. So if somebody is doing the business honestly, then God willing, you'll never face this audit. Next is that there was a lot of paperwork. Record keeping was basically paperwork based. Now it has been digitalized. Every happening is being recorded with a timestamp, and from that records, the manufacturer has to intimate customs about the happenings in the warehouse. What's the principle of self-assessment? So there is no question of taking permission at the time of the removal of the goods, either for export or for DTA removal or DTA supply. Next is job work. Job work is a big help in the sense that if a unit doesn't have enough work, but it has got the capital goods which can be used to do the job work, then they can take up the goods from DTA and do the job work and send the goods back. And the same way, they can send their inputs for job work to some job worker and get their goods back. These are the changes that has happened over the MOOWR 1966. And all these things makes the scheme quite attractive. And again, I'm saying that there would be some teething problems, and hopefully these teething problems will be sorted out in the coming days. And when more and more participation is there, see, basically we export a lot of pharma product, but the intermediate products we are importing. So to some sectors like pharma, it is like a very attractive scheme. You import, you export, and there is no question of customs intervention. There is no question of customs levy. So there are many sectors which can really benefit it. And when there will be more participation, hopefully the government will take out whatever the small problems are there, whatever the small problems that trade is feeling. Such steps will be taken in the future. Now, to make the unit operational, the licensee must undertake to maintain the accounts in a digital form. And let me give an example how he has to have a robust internal control. Regarding the waste generated out of the manufacturing process, the waste that is generated during the manufacturing of goods meant to be supplied in DTA, and the waste generated for the goods which are meant to be exported are treated differently. Means if the waste that has come out of the manufacturing process for the goods that is being sold in DTA, that waste will be treated almost like the imported goods. If this waste is to be taken out, is to be removed from the unit, if the let me tell again that the waste, if it is taken out of the unit, then that waste will be charged to duty. And in case it is arising out of the manufacturing process for the goods which are to be supplied in the domestic market, then these waste will be charged at the same value of the imported goods. But in case those goods are being exported and waste is being generated during that process, in that case, the waste that has been generated will be charged to duty as waste only. That means somebody has imported steel sheets and has manufactured something and have exported them. The scrap that is generated will be valued as scrap and will be charged to duty on that value. Whereas in case the same thing happens in case of the goods that is being supplied in the DTA, then those steel sheets will be those scraps generated during the manufacturing process of the goods which have been supplied to the DTA will be charged as steel sheets only. So you have to have a record keeping method which can keep track of everything. So first thing is that the maintaining the account in a digital form on a very effective software which can give the exact happening in the unit, and they have to keep the record at some other space so that if there is a fire or a flood or something, then in that case the records will not be destroyed. Then execute a bond, then inform the input output norm whenever necessary. Let me tell a little more about the input output norm. I hope everybody knows about it, but let me clarify for those people who do not know it. Input output norm is simple, is that you need 2 meters of cloth to produce one shirt. So the output is the shirt, 2 meter fabric is the input. Then there would be some wastage. And the foreign trade policy defines the wastage in certain commodities. And if the wastage is more than that, then on that, the duty has to be paid. The same way, somebody imports 1 kg intermediate pharma product and produces certain medicines, then he has to give that ratio. What will be the total resultant product from this 1 kg of pharma product and what will be the wastage? And if it is above the norm that has been decided by the FTP, then he has to inform it. If there is any change in input-output ratio, that he has to inform the jurisdictional commissioner. Of course, informing means justifying why it should be accepted. Next is that because it is expected that such scheme will have wider acceptability and such scheme will start in the hinterlands. Take the import-export from basically from the port cities to the hinterland of the country. There would be a lot of manufacturers who will be interested to take up this scheme, but they may not have adequate knowledge about the customs laws and procedures. That's why it has been mandated that every manufacturer or every licensee under this license will appoint a warehouse keeper, and he will have his digital signature, and the condition is that the warehouse keeper should be well versed in customs laws and procedures and working of the customs bonded warehouse. The physical facilities that a licensee has to produce, the provide signage at the warehouse, install a computerized system for accounting, have facilities, equipment, personnel are sufficient to control access to the warehouse and provide a secure storage of the goods. The licensee is also required to provide the details of the software which he is going to use for record keeping. And at the time of the inspection, the proper officer will be checking or will be verifying whether that software needs or meets the requirement of the regulations. These are the compliances that is expected from the licensee. The manufacturers shall maintain accounts relating to stock, raw materials, goods in process, and refuse in proper form. Must have a robust internal control to meet the compliances requirements. The Chief Commissioner of Customs may reasons to be recorded in writing, direct a manufacturer to give his accounts, to get his accounts of his warehouse, of his stores, factories, depots, and other establishments, and the officers will be nominated by the commissioner. So there would be no excesses. There would be always a proper reasoning to take up a auditing of all the activities. So basically, the trade, the fears most about such inspections. So such inspections will have its reasons, and it will be the duty of the licensee to satisfy the queries of the officers. The licensee will conform to the instructions given by the concerned officer or the competent officer, who can spell the details, or we can spell the guidelines in which the issue and return of the imported goods to and from the manufacturing process and other operations will be issued. The manufacturer who wants to suspend his or discontinue his manufacturing process must give a notice to the jurisdictional commissioner that they are going to suspend or discontinue the manufacturing process and other operations, which they have been authorized to carry on in the warehouse. They have to give it in writing to the assistant commissioner or deputy commissioner, and they have to give a 1 month's notice. It is understandable that the department would like to know what has happened, what are the things that has been imported, what has been exported, what has been sold in DTA, whether all the revenue implications have been taken care or not, will all the documentation has been done or not. So a 1 month's notice is necessary for any manufacturer who wants to suspend or discontinue the process. And the sanction that has been given to manufacture the things in the warehouse can be cancelled if the manufacturer himself or any person who is an employee to the manufacturer commits or violates the conditions or the regulations, or if there is any declaration which is found to be false, or if the conditions given or the conditions given in the undertaking which the manufacturer has undertaken to do, he doesn't fulfill those things. In such case, the sanction can be cancelled, and of course, before cancelling, the jurisdictional commissioner will give enough opportunity to the manufacturer to put his side of the story. Since there is a lot of emphasis on record keeping, let us see that what are the records that are supposed to be kept. First thing is that the record keeping is in digitalized form with timestamp. The next thing is that these are the records that has to be kept. There is an annexure B which says that keep record of each activity, operations or action taken in relation to the warehouse goods. As I was saying, the received, consumption, storage, and removal. All the activities has to be recorded with the timestamp. Keep record of drawal of samples from the warehouse goods. Keep copies of the following documents, that is bill of entry, transport documents, forms of transfer of goods from warehouse, shipping bills, bill of export, any other document indicating receipt or removal of the goods from the warehouse. So some documents have to be kept in material form, but all the activities that has taken place in the warehouse in relation to the goods, input goods, has to be kept in a digitalized form. Update the records and accounts accurately and preserve for minimum 5 years from the date of removal of the goods from the facility. So 5 years, till such time the records has to be kept. Preserve updated digital copies of the records at a place other than the facility to prevent loss of records due to natural calamity. I have told you before that there has to be a mirror image of the records that has been kept in the units, so that if there is some natural calamity, then the records are not lost. Filing a monthly return. This is the only compliance that some people may find it cumbersome, but in compared to the earlier arrangements, this is a much easier compliance. That is, the monthly returns are filed in which the licensee would show the receipts, storage, operation, removal of the goods in the warehouse. I mean, that is at least that much the department has to know to keep track of. See, let us admit that most of the export promotion schemes or most of the exemptions has been misused a lot. So when the department is coming out with something new and placing a lot of trust in the trade has to respond to. The trade has to find out who the black ships are. They themselves should come out with such proposal that the black ships are weeded out and people are allowed to do trade without fear, without any difficulty. Ease of doing business, we have discussed in the beginning that one of the objectives of this scheme to make the doing of business in the country a easier one. Everybody knows that trade is the lifeline of the economy. If there is no trade, the economy is not going to grow. There will be no employment. So the successive governments, I mean the governments, they all have realized that somehow they have to find a scheme which will neutralize the customs duty and make Indian goods competitive in the international market. So the department or the governments are trying to make schemes which, without adversely affecting the revenue, will facilitate trade. So in this, what are the things that has been done so that doing business is easier? Single point of approval. Earlier, everybody knows that for every approval, somebody has to go to Delhi. And since everything is centralized at one place, it used to take time. Now, the single point approval is easier in the sense the local trade don't have to go to Delhi. They have to explain everything to one single authority. They don't have to tell that story to 10 different people. And the jurisdictional commissioner is in the best place because he can have the ground level realities. So whether the units are there, whether they are working, whether they are producing something, whether they are exporting something or not. So since he can have the ground realities, it is much easier for him to take the decision. Next is the common form. So there should not be any mistake. It is a common application and approval form. Common approval form means for section 58 as well as section 65, there is only one form. Even the existing units, those who are already working or already manufacturing under 58 can always apply for permission under 65. And the new units, those who are starting, they can do it with one single form. There is no application fee or any incremental compliances cost other than setting up and maintenance of the border. So this again is making the life easier for the trade. Standard input output norm. This input output norm will be given by the licensee and will be ratified by the jurisdictional commission, not by the norms committee. Earlier, the trade has to give or the manufacturer has to give the input output norm, which will go to the norms committee, and there it will be ratified. So the manufacturer has to go before the norms committee to justify it. If there is a change in the input output norm, again the same process has to go through. but now it will be with the jurisdictional commissioner, which everybody, I believe, will agree that it will make it much easier to get the things done with the jurisdictional commissioner than the norms committee. Digital record keeping and reporting. Once there will be two kinds of trades. I mean, those who are not interested in keeping the record in digital form, and there would be people who will be interested in keeping the things in digital form. So if you are keeping it in digital form, you are transmitting the same information to the department in digital form. And once it is in digital form, there is no way you can lose it. Keeping the record on physical form is a difficult thing, basically because that involves paper, and paper can be lost. And you can't have two sets of original paper. But in digital form, you can store it at 10 different places. So no matter what, the information will not be lost. No prior permission for removal of bonded. So this is again, it may not sound so, it really is a very welcome step for the department to allow the manufacturer to remove the goods without taking prior permission of the customs officer. No approval required from multiple authorities. Again, all approvals from the one jurisdictional commissioner. So the manufacturer doesn't have to run around. He only has to satisfy the queries of one person, one authority. So this is how the basic idea of making the business easier. Now, the benefits in this scheme. Benefits of the other schemes as well as GST benefits of ITC refund is available. With bonded manufacturing facility, various benefits, other schemes like EPCG, advance authorization can also be claimed. Second is that no fixed export obligation, no limit on quantum of clearance that can be exported or cleared to domestic market. So if a unit which is or a licensee who used to export finds that he is not getting buyers in the export market, can think of selling the goods in the domestic market or vice versa. So there is no fixed export obligation. So this flexibility is available to him. Then seamless warehouse to warehouse transfer. One entity can have multiple units, or they can supply the goods. Somebody is doing the trading. They can import it here in Mumbai and maybe supply the goods in Delhi area. So they can transfer it to another customs bonded warehouse in Delhi. And this is without any payment, or it will be covered by the original triple duty bond. So they don't have to give another bond as well. Record keeping, as we have discussed, so I don't want to go into that. This is the thing that I was telling, waste generated during the manufacturing process. I mean, you all be knowing that in some of the processes, the waste generated is up to 9 to 10%. What happens to that waste? According to the regulation, if the waste is cleared for home consumption or removed to DTA, then the duty has to be paid. And I told you the difference between waste generated in manufacturing process of the goods that is being exported and waste generated during the manufacturing process of the goods that is being supplied to the DTA. Apart from that, the waste, if it is destroyed, then there is no duty liability. I just received a question that I'll just answer because it is related, that from a MOOWR unit to supply to EOU, I believe. It will be a dimmed export. If it is being supplied to a EOU, it will be a dimmed export, and everything that benefits associated with exports can be availed by the licensee. These are the dimmed exports. Supply of goods to EOU, STP, EXTP, BTP, supply against advance authorization or duty-free import authorization, supply of goods except second-hand capital goods to EPCG authorization holder, supply to projects financed by the multilateral or bilateral agencies or which are being funded by multilateral or bilateral agencies notified by the, basically this bilateral or multilateral agencies must be notified by the Department of Economic Affairs or Ministry of Finance, supply to UN funded projects, supply of goods to nuclear power projects, to oil exploration and some other industries through competitive bidding. So all these things will be considered as deemed export and they can avail the benefits that is associated with export. Some of the immediate benefits that a licensee gets. Basically, the MOORWR 2019 offers an WTO compliant alternative to the units under existing schemes, a method to neutralize customs duty in international supply chain. Should I tell you a little more about it? Yes, I think we do have time. See, basically, the existing export promotions schemes like EPCG, UOU, and all these things has been flagged by WTO. On complaint by America, the Grievances Redressal Committee of WTO has flagged these schemes and it has asked India to stop all these schemes. India was availing that benefit, or India was allowed to continue with these schemes basically when the per capita income for Indians were less than $1,000. And in 2015 or 16, I believe, we have crossed that. After that, India was not allowed to continue these schemes. So America complained and the WTO has flagged these schemes and asked India to stop all these schemes. Now India has appealed against that, but it is almost a certain thing that all these export promotion schemes will be stopped in near future. That's why this scheme has come as alternative to promote export or to promote local manufacturing. Now, this scheme allows manufacturers to save cost of working capital by deferring custom duty on input steel removal of the resultant product or on capital goods till such goods are removed from the home consumption that we have already discussed. Less administrative burden because of this digitalized record keeping and all those things, and less customs intervention, administrative burden is less. Then pre-approval of import-export items is not required. You have complete freedom of import and export items. All you have to do is to inform. There is no need of pre-approval. Solves the product problem of credit accumulation. Job work allowed following GST compliances. Of course, since the job work is going to be some manufacturing process in the DTA area, it has to be GST compliant. More liquidity, working capital savings, no limit on DTA sale with the GST compliance, no restriction on availment of benefits under the FTP, foreign trade policy. These are the immediate benefits that accrues to any licensee under MWO 2019. This is the reason why the bonded warehouse scheme or MOOWR 2009 scheme should be taken up seriously by the manufacturers. The fate of export incentive schemes are in doubt, and most probably they have to be stopped. When compared to the other scheme, this scheme gives competitive edge in many areas. We'll be discussing that thing in detail. Merchant export for India scheme no more attractive now, as potential to attract foreign direct investment who will be interested in manufacturing in India to cater to Indian market as well as export market. I gave the example of Apple in the beginning. Let us see. These are some of the benefits that you can see that. These benefits makes it an interesting scheme. Benefit of customs duty on import of capital goods and for export supplies. These schemes ticks all the boxes when compared against EOUs, EHTPs, STPs, BTPs, EPCG scheme. You can have a look at the things. It practically ticks all the boxes. And things like time limit for removal or usage, no time limit. In all cases, there was some time limit, validity period, requirement of minimum value addition, which is once again a positive NFE has to be fulfilled. That is once again a very cumbersome thing for the trade. All those things has been taken out, and the only area where some issues is there is the depreciation of the capital goods. Then I comes to some of the facts, some of the questions basically that are asked. Is SIAN declaration necessary for every product? Some products are unique. Answer. As per MOOWR 2019, the applicant shall also inform the input-output norms wherever there is any change in the raw materials or the final products, and shall also inform the revised input-output norms in such cases. Can all export benefits under FTP and customs import of goods at concessional rate of duty be taken in bonded warehouse simultaneously? The eligibility to export benefits under FTP or IGCR would depend on the respective scheme. If the scheme allows, units operating under Section 65 has no impact on the eligibility. In other words, a unit operating under Section 65 can avail any other benefit if the benefit scheme allows. Simple thing, I mean, if some goods, imported goods has been used to produce some resultant product, and those resultant products are being sold in the DTA, the first thing will be the rate of duty on which the X bond bill of entry is filed. On that day, if there is some exemption for such goods, then there would be no duty on such goods. This is as simple as that. If the scheme allows some benefit, then the units under 65 can avail it. Can customs conduct audit of units operating under Section 65 of the Act? Yes. The licensed units will be subjected to risk-based audit, as no physical control on day-to-day basis is exercised on utilizations under Section 58 and 65 of the Customs Act. Goods cleared for home consumption on payment of duty and returned back for their purpose will be treated as DTA goods. Similarly, goods exported and subsequently returned back on account of rejection, repairs will be treated as import, and relevant notification for the import will be applicable. Now, one thing is that the resultant products of such units do not fall under definition of warehoused goods or imported goods. The value of the supply of the resultant product is not liable to be charged on duty. Only the imported goods contained in the resultant products will be charged to duty. And if there is some exemption on the imported goods on the date on which the bill of entry is filed, then that exemption will be applicable. Some more questions. In a unit working under 65, can the imported goods be removed for DTA without any manufacturing process or at such clearance? Since the warehouse operating under Section 65 also functions as a warehouse licensed under Section 58, the licensee can also import goods and clear them as such for own consumption under the provision of Section 68 on payment of import duty, along with interest as per subsection 2 of Section 61 of the Act, and clear them as such for export under Section 69. The licensees are also required to submit monthly returns in Form B as prescribed under Section under the circular. Now, impact of EDD. This is a question that I have faced in the last webinar, so I have included it. If the imports are made from related party, the imports from related party are governed by the customs valuation determination of the price of imported goods, Rules 2007. Further, there is a board circular. By that board circular, the board has decided, while the reference to the SBB under provisional assessment, no security in form of EDD shall be obtained from the importers in case of units working under Section 65. However, if the importer fails to provide documents and information required for SBB inquiries within 60 days of such request, security deposit at the rate of 5% of the declared assessable value shall be imposed for a period not exceeding next 3 months. Simultaneously, the importer shall be granted for the 60 days to comply. Now, the question that has been arised, whether the goods, whether the units operating under provision Section 65 procure goods from FTW. Yes, they can. That they are, there is no restriction on units working under Section 65 to source goods from the SEZ or FTZ following the due procedure. The same way, if the goods from a unit that is working under Section 65 is supplied to any of these units, then that will be considered an deemed export. If the imported capital, yes, Mr. Jagpal, we will be sharing the PPT, no issue. If the imported capital goods are cleared for home consumption after use, each depreciation is available. No, sorry. As of now, no depreciation is available if imported capital goods on which duty has been deferred are clear for home consumption after use in Section 65. Can all export benefits under FTP and customs import of goods at concessional rate of duty rules 2017 be taken in bonded warehouse simultaneously? The eligibility to export benefits under FTP or IGCR would depend on the respective schemes. If the scheme allows, units operating under Section 65 has no impact on eligibility. In other words, a unit operating under Section 65 can avail any other benefit if the benefit scheme allows. If the goods are cleared from PBW, let's say that customs bonded warehouse is GST applicant, to the extent that the resultant product, whether emerging out of manufacturing or other operations in the warehouse, is cleared for domestic consumption, such transactions squarely falls within the ambit of supply under Section 7 of CGST Act 2017. It would therefore be taxable in terms of Section 9 of CGST Act 2017 or Section 5 of Integrated Goods and Services Tax 2017, depending on the supply being intrastate or interstate. Some participant has asked for these questions. I hope this answers his queries. These points are points to ponder. Basically, there are certain things which every participant must know before taking interest in thinking about a unit under Section 65. First thing is that service operations are not allowed. The audits of units operating under Section 65 would also be risk-based criteria. There is no prescribed frequency for such audits. Hence, it is always necessary to maintain proper and up-to-date records. Tracking of imported content in goods that are processed and maintaining a complete digital record. Supply to private bonded warehouse is not treated as deemed export. Non-availability or drawback on exported goods. There is no income tax benefit available for the bonded manufacturing warehouse. Non-availability of depreciation imported capital goods at the time of clearance from the bonded warehouse at later stage. And as of now, there is no clarity on the wastage norm. Whether the wastage norm decided by the FTP will be the final thing, or the self-certification or the customs approved waste risk criteria will be adopted for finalizing the wastage norms. So these things has to be considered before someone thinks about starting a unit. Let's have an estimate of the real benefits. As I have told or I have maintained that this is a scheme where the government is making every effort to make this scheme attractive, make this scheme acceptable to the entire state. But there are certain issues why this scheme has not been widely accepted. Apart from manufacturing, the scheme is extended to activities like packing, e-commerce. A feasibility study is necessary wherein the interested party should look at his business model to find out what are the real benefits. Analyzing the benefits under this scheme in real terms can lead to an informed decision making. One must first compute the amount of benefit in absolute term. Let us say that some industry which basically depends on local supply chain, he is not going to get a lot of benefits. Only the units which are dependent on imported inputs and do have some export are going to be benefited by such scheme. So these are the few of the things that one need to see is the quantum of projected import in the next 2-3 years and value of the customs component on the scale. Reduction in the above cost on account of waiver of customs duty under this scheme. Plotting the normal lead time between import of goods and its removal from the factory after manufacturing. And assessing the quality saving on account of the deferral of the payment of customs duty. Computing the input output loss and assessing the percentage of imported material as per the BOM in the final output goods at distribution level at every stage at which the duty liability is going to be levied. An assessment of the duty benefit must be made as to applicability of the benefits on the various types of the duty levied, social welfare surcharge, anti-dumping duty, safeguard duties. These are the areas where one analyze these points, and if still it makes sense that a scheme is visible, then people should think about such schemes. Apart from that, those who are interested, particularly I said that there are certain sectors which are heavily dependent on imported inputs and on the imported capital goods also. Like pharma sector, I have told you, in such sectors are going to benefit immensely if they adopt this scheme. That's where we come to the end of the discussion. Now we'll take up the questions. Yes.
Many of the questions were raised as doubts at the beginning or at the initial stage of your presentation.
Yes.
So we can see that many of those are already addressed during your presentation.
Right.
So I request you to just quickly go through these few of those, sir, because I see that almost those which pertain to waste management, sign norms, applicability of policy, clearance without manufacturing, and depreciation on imported capital goods. Such queries are already being addressed in your presentation, sir. So
Yes.
maybe few of the attendees, they raise these queries at the initial stage, sir. So just go through, sir, quickly, and as the paucity of time is there, sir.
Okay, let's say that with this we'll come to the end of the presentation, and as I said that we'll be sharing the PPT. If anybody has got any further queries, my contact details are there. They can send me a question, and I would love to answer them.
Thank you, sir. Thank you for your elaborate and excellent presentation, sir. And you have shown me light on all the intricacies and almost every aspect of this scheme, manufacture and other operations in customs bonded warehouse. And I was surprised to see that whatever the doubts and queries people were having in mind, those were almost already there, means in the presentation itself, means in the form of clarifications, in the form of questions to be answered at the end of that. Means it was really means excellent presentation, sir. And don't see means anything which is left out. And presentation itself was like it's complete thing, sir. And
Thank you very much.
thank you very much, sir.
Managements.
And now means I would like to request Sri Sanjay Kumar, Assistant Director, DGTS, for extending the vote of thanks, sir.
Thank you, Pradeep. Good afternoon, everyone. I'm Sanjay Kumar, Assistant Director, DGTS, Mumbai Zonal Unit. After the brilliant presentation by Manoj Das, sir, it's time for a vote of thanks. First of all, on behalf of DGTS Mumbai Zonal Unit, I extend my sincere thanks to our Principal ADG, Sri Sanjay Rathi, sir. Sir has always encouraged and guided us to organize such webinars. Thank you, sir, for your support. My special thanks to Sri Dushyant Mulani ji, President BCBA Mumbai, and Dr. Pramod Sant ji, Director General FFF AI, for sparing their valuable time and participating in this webinar. It was nice to hear their viewpoints, the topic. We have conducted a number of webinars in association with BCBA and FFF AI, and we hope to continue to do so in future as well. My heartfelt thanks and gratitude to Sri Manoj Das, sir, our speaker and presenter of the day, for giving such a brilliant presentation. Sir, as usual, it was outstanding presentation. It was an elaborate and insightful presentation, and I am sure trade must have immensely benefited from this. With this, with the kind permission of our Principal ADG, Sri Sanjay Rathi, sir, we would like to wind up, like to conclude this session. Thank you, thank you, thank you all. Yes, yes, Mrs. Dr. Pramod Sant. Sir, you.
Really, thank you for such an elaborate testing. Just I was mentioning that, not that.
Thank you.
Thank you.
Thank you, sir. Thank you, sir.